Crude oil delivered a little swing last week, failing to stay above $80 levels, which were the critical resistances as we have discussed in our update last week. It has failed to stay above 80, and on the downside, 75.8, is the zone which it is still respected. So, can we expect oil to break the lows from the last week? Can we expect it to crash towards 74, or there is a possibility of a reversal? What is going to be our strategy in order to profit trading crude oil in the coming week? We are going to see with the help of charts and indicators. This is a weekly review. I do share my twice a day updates for crude oil, where I do give a detailed analysis and the targets for crude oil so that you can all profit. So subscribe to the channel and press the bell icon to get the notifications. Do like, share and comment. Join the free Telegram channel for live updates and join the channel memberships here on YouTube to support the effort. Let's look at the 4-hour chart. See, 4-hour charts moving averages are trading with divergence and bearishness. See, it is trading in this bearish channel. After this little rise and retracement, it is given a breakout. Most important part on the 4-hour charts is it has stayed in the zone for a while before taking this downturn. But on the daily charts, these levels are important. It is still respected 76, 75.8 levels. Now, trying to retrace, we have to wait in the coming week for oil to stay above 80 in order to confirm a reversal. As long as it stays below 80, we are not treating this as, or we are not expecting this to reverse. But beyond 80 and 81 is where the bulls will try to take over and a stronger rise can be expected. Coming week is going to be definitely critical. The stochastic rising from the oversold. Look at MACD. See, first of all, the MACD has hit the lows here, then the rise, retracement, and now crossing over here again. So this suggests that the bull run might continue. We can see a revival of price from here. And since it is closed above 70 or close to 78 levels, we have to wait and watch how it behaves in 80. If it breaks beyond 80, certainly we are looking forward to 80, 81 zone as the first resistance zone, 82.4 as the next, and staying above 82.4, definitely more bullish momentum can be seen here. RSI rising from the lows here on the 4-hour charts. Coming to daily. Now look at daily charts. Look at this zone. This is the zone where oil has consolidated for a couple of weeks before it has seen this rise. And see, it since then it has erased all the gains. It has come to the same zone. And look, it is consolidated here. It is doing the same again here on the daily. And thus these $5 levels here between 75 to 80 is going to remain a critical level. See what has happened here. Here also you will find 78 levels proving it a support. Here also 77.8, 78 proven out to be a support. It has moved towards 76. It has also moved towards 76 levels. And before that we have seen the rise, and before that we have seen this drop. So we have to wait which direction it is going to take. On the daily charts it is important. See, diminishing bearishness is seen here, where we have seen the candle sizes getting diminished, achieving lower lows. We have seen it recovering. The coming candle is going to be important. If it breaks beyond 79 and then $80 levels, you can consider that now oil prices are reversing. Though the moving averages have crossed over here, these are trading with divergence, these are staying bearish, but I am focusing on lower lows here, and this calls for lower highs as well, which are right now at around 82. And if it breaks 84, that is a reversal, complete reversal. Right now also I am focusing on, look at this bull run, look at this flag formation, and a breakout here is going to be significant. But again, this is the just one way of looking at it. There is a bearish perspective as well, because it has given a breakout here after a bit of consolidation, though it is trying to fall back. But if it breaks below 75.8, remember one bearish turn sideways, and if it breaks here on the downside below 75.8, we will look forward to 74 as the first target, 72 as the next, and in fact $70 levels. Though I am still of the view that it can bounce back strong, as I am focused on this flag formation, and the breakout is what I will be waiting for. Stochastic has hit the oversold levels. Look at MACD on the daily charts. It is also hit the bottom. It is almost trading at the lows here. After forming the double bottom here, it has seen this rise, then the retracement, and if it crosses over from the current levels, we can look forward to a stronger rise. RSI rising. Coming to weekly chart. Now look at weekly charts, divide this into two, find the symmetry here. What has happened here is trying to replicate the same. Also, if you look at, see, it is still trading in this channel here. It is still respecting this bullish channel. After the drop, this is retracement. And now remember, if it drops below 74, 70 zone, this is going to be a sharper fall, which I do not expect it to replicate, or I do not expect such a sharp drop here. I still see that it is going to respect this bullish channel, and a possible recovery from the current levels is what we can look forward to. But that is my wish. If you look at the charts, let's have another look at the charts. See, this is a bullish cross first of all. On the moving averages, these are still running parallel. Though the price has closed below the moving average, this is significant. Next is, if you look at higher highs, lower lows are, and you will find that the median is here at around 78. So now with the median at 78, price have traded so far. So once it stays above 84 78, chances for it to move on the upside will increase. And once it breaks beyond 80 81, consider that as a reversal. Else what is happening here? See, bearish candle, consolidation, another bearish candle, and dropping below this will lead to increasing bearishness here. Be watchful. A breakout is going to be a stronger one, where 75 and 74 are the two targets which you can look forward to. Next is on the weekly chart, the stochastic has come to oversold levels here. It can try to show recovery. The MACD has crossed over here again, and this is a bearish indication. It is crossed over, it is trading with divergence, it is looking down, and this is coming after a series of greener candles, and this is just second red candle. This is my worry point here, because see, this is coming at a median level, and see, this is trading with divergence. A divergence suggests that it could continue to diverge more and yield more bearish candles. This is one worry point, and it is a stronger one. If you look at RSI, this is looking downwards, trying to trade bearish. Coming to monthly, if you look at monthly charts, see, moving averages are running parallel. What we have seen here is, see, I can look into it into two ways. First, look at this symmetrical formation, divide this into two. You can find out identically symmetrical formation, and what has happened here is highs, it has come up from the highs, it can continue to rise. That is one observation you should look. Second point to look at it here is, see, lower highs, lower lows. Where are the lows? It can again retest the double bottom levels at 64 if it continues to drop. Third observation is three greener candles, and it can lead to, see, preceding candle is a reversal confirmation here for the trend, but the monthly candle has not yet closed, so I will not say that it has reversed. Now if the monthly candle closes at 81 82, you can say that the next candle is going to be a bullish one. Thus coming week is going to play an important role in deciding the direction which oil wants to take for the next few months, because if it stays bearish from here and drops below 74 70 levels, certainly more bearish momentum may prevail in the coming months as well. Right now, possibility of a reversal and a rise exists, but see, three greener candles and a reversal confirmation indicates slight bearishness. Stochastic rising. Now this is my observation on the MACD. On the MACD, this is significant. First wave, second wave is almost at the verge of culmination. So even if current candle closes in red on the monthly chart and the next candle tries to bounce back, we can look forward for another bullish wave, which right now it is shying away from. So it has to cross over, and either this candle or the next candle has to be bullish enough. It is going to happen very, very soon, but it can try to consolidate here for a while before bouncing back. RSI has dropped here. So now we have seen the charts, we have seen the indicators. Time for me to give you the trading levels and strategy. And before I give you the trading levels, if you want to learn this art of trading, you can be part of my 31st mentorship batch starting 10th of June. Register yourself now, reach out to me for details. My Telegram and email IDs are mentioned in the channel and video description. In this batch, I am going to share all the tools, techniques, strategies, and the trade setups which we have curated with our years of experience, so that you can all trade profitably. Else, you can be part of my Signal channel on Telegram, where trading as per the signals also you can benefit. So write an email or ping me on Telegram for your queries related to the services. My Telegram and email IDs are mentioned in the channel and video description. And those who had asked me to recommend a broker with global presence, which offers a diverse set of instruments to trade for, which offers a swap-free account with the lowest spread, so that you can all profit, you can find the recommended broker also in the channel and video description. Now, let's talk about the levels to buy. See, 78, 78.2 is the first resistance zone. It needs to break in the coming week. And if it stays above this, we can look forward to 78.6, 79.1 and 79.4 levels. If oil breaks beyond this, then you can look forward to 80, rather I will say $80. And breaking beyond 80 is where you can say that now the bulls are interested in further rise, where I will be looking forward to 81, 81.5 and 82.4. But see, the rise from the current level to $82 is hardly hardly 3 to 5% of rise, and 5% of rise in an instrument such as crude oil is not a big deal. So yes, it can reverse completely as well. Be watchful. Again, I am saying the direction it is going to take in the coming week is going to remain the direction for next few weeks. So we have to be careful here. Now on the downside, I will recommend a sell here at 77 point. See, 77.3, 77.5 is my favorite, and I have been repeating these levels since long now in my daily updates as well. Below that 76.8, then 76.4, and then 75.8. Now, these are the critical levels which oil needs to break in order to confirm bearishness. Else, as long as these levels are respected, the chances of a pullback will be very, very strong. And below this is where the bears will be waiting for 75.1, and 74 are the next targets which it may try to achieve. Though I'll be still looking forward to a bounce back, but it is not showing much signs here. You have to watch out, you have to trade with caution. As long as these levels are respected, that is 75.8 is respected, chances of a pullback will be very, very high. And on the upside, as long as $80 levels, $81 levels are respected, the chances of a drop will be high as even if it can show a rise, extreme rise towards 82, and then close the month with a doji towards 79, 80 levels. That is one possibility you should not ignore. So take your positions accordingly. Like, share, subscribe, and comment. Join my mentorship batch, join my signals channel. Do watch the daily updates. Do join the free Telegram channel and join the YouTube channel memberships here. Thank you. Have a great profitable trading day ahead and a happy weekend. Thank you.